Good afternoon, everyone, and welcome to the Basics of Social Security presentation. My name is Tom Davia. I'm a certified financial planner and also a financial consultant with Alliant Retirement and Investment Services, or as we affectionately call our department here at Alliant, ARIS. We are a full-service financial planning program offering retirement, insurance, and investment services to the members and prospects of Alliant Credit Union. So whether you're looking for comprehensive financial planning or assistance with a specific topic or goal, or just want a second opinion, we're here to help. Some additional resources we have available to you in addition to today's presentation, our webinars and our podcast and our blog. Each could be found on our website, ARIS.AlliantCreditUnion.com. Webinars are /events. The podcast would be /podcast. And of course, the blog /blog. So you could find information on different financial topics through our podcast or join us on our weekly webinar schedule. But back to today's topic, we're going to be talking about Social Security today. Here's just an agenda of what we're going to be talking about. So thinking about Social Security, a little bit about your benefits, and then we're going to throw a quiz in at the end as well. So number one, thinking about Social Security, right? Questions, things that we think about are, will it be around when you retire? Maybe you're thinking about when can you start taking benefits? And hopefully you're thinking about when can you maximize your benefits as well. So thinking about Social Security, when you think about this, not many people know what their full retirement age is. We call that FRA, or full retirement age. We'll go through those numbers for you and let you know today exactly what your full retirement age amount is. But in a recent study, less than 40% of people know what their full retirement age is at Social Security. Also, about 40% of respondents to that study, 40% aren't sure how much their monthly Social Security benefits will be. We'll talk about that much more as well, but as a financial planning firm, it's kind of a key discussion in the financial planning process. So we want to make sure you know what that number is as well, how much your benefits could be. And additionally, workers within 10 years of retirement, they overestimate their monthly benefits by about 30%. So hopefully we can clear some of this up or guide you in the right direction to start thinking about Social Security in a right way. Now we're going to talk about knowledge is power, right? Finding out some of this information. So one of the best resources we have is something provided by the government or the Social Security Administration directly. The website is ssa.gov, socialsecurityadministration.gov. There you could receive your online statement, which is going to show you your full retirement age. It's also going to show you your benefit at full retirement age. It'll show you your benefit if you start early. It'll show your benefit amounts if you start late as well. Now, a good thing is on your benefit statement, it's also going to show you your earnings over your career. So if you take a look at that and you see some of those earnings are incorrect, or maybe you have a zero in a year that you actually worked, this would be a good chance to contact the administration, show them that you worked in that year, and make sure you're getting the full benefits that you've been paying into the system for. That's the financial planning point. We want to make sure we have your full retirement age amount. Additionally, it's good to go in and register so nobody steals your identity, registers instead of you, and claims benefits. So it's good to have that account set up. You can access your paper or your online statement whenever you want to. A long time ago, Social Security used to send out paper statements. They don't do that anymore. They do that if you're over a certain age. But if you'd like to check your benefits, just a great resource here for you. So we're going to talk a little bit about Social Security. Is it going to be there for you? So there's a lot in the news about Social Security maybe going away or Social Security going bankrupt. And a lot of people worry about this, and a lot of people kind of discount Social Security altogether and say it's not going to be available for me and it's not going to be around. So they don't consider it in their financial planning. So let's take a look at what's really happening and if those benefits are going to be there for you. Now, right now, Social Security is a pay-as-you-go system. And what that means is we have workers paying into the system in this current month, and beneficiaries are receiving their payments the next month from what the workers pay in. So Social Security, by definition, can't go away. As a pay-as-you-go system, there's always going to be people paying into the system. It's just how many people are taking out of the system. So over time, Social Security was started in 1935, and there was more people paying into the system than there was people taking out of the system. Social Security was originally designed to cover the retired worker, and now we've expanded that and we cover not only the worker, but we have spousal benefits, disability benefits. It goes greater than it originally started. So over time, what we did is we built up this trust fund, right? We were taking more in than we were paying out. And now we're starting to pay more out than we're taking in. So we have this trust fund balance that's being depleted. So currently at the end of 2021, the trust fund was at about $2.8 trillion, but that's estimated right around the year of 2035 to be exhausted. So there'll be no more trust fund to supplement what workers are paying into the system. So if nothing else changes, trust fund will be exhausted right around 2035. There's going to be a shortfall of benefits. So if we do nothing across the board, there'll be a 25% reduction. So sometimes we'll hear from clients or members of the credit union that say, you know what, I'm going to start my benefits as soon as possible. I want to get into the system now before all this changes. And actually, if you look throughout history, whenever there's a change to Social Security, it affects everyone. So it doesn't matter when you joined, whenever there's an amendment, it's going to affect whoever's receiving benefits. So again, if we do nothing, benefits will be reduced by 25% across the board. So too many people live on Social Security as a sole source of income or the primary source of income. So I don't believe that we can have a reduction of benefits of 25%. It'll hurt too many people. So what's going to happen is as you get closer to 2035, you'll see more discussion about this topic and ways to change it. If we increase the full retirement age, it started at 65 back in 1935. It's creeped up a little bit. We're at 67 right now as the maximum full retirement age. But if we change that, if we make that a little later, that will help the system. Right now, you probably see on your paycheck the Social Security tax or the FICA tax. Right now, an employee pays 6.2%, an employer pays 6.2% for a combined 12.4%. If we raise that a little bit, if that's a quarter point on each side, that'll help solve the system. There's a maximum on earnings that you're paying Social Security taxes on. For 2024, that comes out to about $168,000. If that's raised a bit, that'll help solve the problem. So I don't think you're going to see one specific area that is going to be raised like the retirement age. I think it's going to be a combination of all these things. So this is a bit of a political discussion, but I believe it's going to be addressed as we get closer to the year 2035. You just have to know that it's not going to go away. In one shape or form, it's going to be available, but I truly believe that we're going to step in as a country and fix the problem. So what I'm going to do is I'm going to move into claiming benefits. And here is the full retirement age amounts. Depending on the year you were born, you're either 66 in a few months, or if you were born after 1960, it's going to be age 67. So depending on the year, this is FRA. This is when you receive the full retirement amount. Now, If you take benefits earlier than full retirement age, there's a reduction. If you take benefits later, then there'll be an increase in your benefit amount. And we'll talk about that shortly as well. But again, just a quick note on the benefits. So Social Security was never meant to be a primary source of income. You want to look at this together, kind of a one piece of the puzzle. You want to look at your other investments. So definitely take a look at Social Security. We'll analyze your benefits for you with a comprehensive financial plan, but we'll take a look at it and how it works together with maybe a pension that you might be eligible for. Or if you're not eligible for that pension, we'll do a checkup for you and see how the 401k savings is going. Maybe personal savings outside of retirement accounts, individual retirement accounts, IRAs. This all works together to make sure your retirement goals are achievable. But remember, Social Security was not meant to be your primary source of income. So again, going back to the full retirement age, if we say your full retirement age is 67, we're going to show here on this chart that you'll receive 100% of your benefits at 67. So if you take it earlier than 67, you're going to have a reduction. And if you take it later than 67, you're going to have an increase. Later than 67 will give you an increase of 8% each year. So every year you wait, your benefit will go up 8% guaranteed. So it goes from 100% of full retirement age amount to 108%, 116, 124%. There's not many investments out there that can guarantee an 8% return. So that's why we want to make sure that we're doing the proper due diligence on this and making the right decisions for you as well. If you take benefits early, so if you take benefits before your full retirement age, there's going to be about a 6.25% reduction each year that you take it early. Now, when we talk about the increase for taking benefits later or the decrease for taking benefits earlier, it's not based on the year. It's actually based per month. So it would be 8% deferral credit divided by 12 months out of the year. So every month that you wait, you're going to have a little bit of an increase, a little bit of an increase. It'll annualize to an 8% increase. For every year that you take it early, 6.25% divided by 12. So every month that you take it early, you're going to have that fraction of a reduction for you. Now, some people take their benefits early. Reasons for taking benefit early is number one, of financial need. I need the money to pay my living expenses. Number two, maybe you can't work any longer because you have some health issues, and this will supplement your income or give you additional fixed income so you can meet those living expenses and pay for that. You have caregiving responsibilities for a family member. You need extra income coming in. Maybe you're going to stop working for a while. Maybe you've lost your job. These are all reasons that we can look at to say, hey, I'm not going to wait till full retirement age. For me personally, it makes sense to start those benefits earlier. Now, reasons for waiting, right? You're still working. You don't need the money right now. You have employment income or you have income from other sources to tide you over. So you have a pension that's already coming in or 401k plan that you're doing distributions from. You believe that you have a longer life expectancy. Now, there's something that we go through with you when we build that comprehensive financial plan, but there's something that's called a break-even point. And we can analyze that for you, but show you, well, if you take benefits early or if you delay and you take benefits later, at some point in time, those two pool of money would kind of technically balance themselves out or break even. Typically, we see that around age 80, 81. We could find your exact age. But then we look at life expectancy and we say, all right, based on family history, my family tends to live to X age. And everybody's going to be different. But if you have a lot of octogenarians or centenarians in the family, it might make sense for you to wait a little bit. But these are all the things that we'll talk about, right? What are the pros and cons of taking early? What are the pros and cons of taking late? we'll help you walk through that process and kind of show you what those amounts would be. But when you kind of go through all of these options, there's a little bit of an art involved with the science of when to start Social Security. So these are just common reasons that you can look for waiting. Social Security is money that you can always count on, right? So in addition to what we talked about, those deferred credits, benefit credits for waiting past your full retirement age amount, there's also adjustments made for inflation. And this used to actually take an act of Congress. So Congress would have to get together, they decide what an appropriate amount would be to increase your Social Security payments to keep up for inflation. We call this the COLA adjustment or cost of living adjustment. In 2022, the COLA adjustment was 5.9%. In 2023, with our high inflation period, Social Security received a cost of living adjustment of 8.7%. And for this year, in 2024, the living adjustment was 3.2%. So again, if you are deferring your benefits, not only do you get the 8% deferred annual credit for waiting, but you're also going to factor in these cost of living adjustments. So you can see these amounts add up. They're significant and they could last a long period of time as well. Money you can count on. Again, this is backed by the United States government. So although the forecast is there may be a reduction around the year 2035, again, it's a pay-as-you-go system. There's going to be money coming in, and the government is going to make sure those payments go out to you on a monthly basis. And the payments will go on for you as long as you live as well. So we talked about that a little bit, the longevity concern. So this will be there with you for as long as you live with those cost of living adjustments. So now we're going to talk a little bit about income tax on benefits. So you have to pay taxes potentially on the benefits that you're receiving. So while you're working, again, you'll pay the 6.2% going in as the employee amount of your Social Security or FICA tax. The employer would pay 6.2%. If you're self-employed, you have to pay the combined amounts of 12.4%. And again, that's going to be on wages up to this year, it's $168,600. So if you reach the maximum, essentially out of your income, you would pay $10,400. So that's the tax that's coming out of your check. Now, when you start receiving benefits, there's also a tax on receiving benefits. So there's two different charts, an individual chart, a joint chart. So what we look at is your adjusted gross income. So take a look at your tax return, look at your adjusted gross income, and then you have to add back in there maybe non-taxable interest. So if you own any municipal bonds, you add that non-taxable interest back in there, and then you add half of your Social Security benefit. You put that all together, adjusted gross income, non-taxable interest, half of Social Security benefits. That's going to be what's called your provisional income. Now you take that number and apply it to this chart. If you're married filing jointly, you look at the bottom section. If you're an individual tax filer, you look at the top section. So when you go through those numbers, it's pretty easy to go through the first tier, 25,000 of income or 32,000 of income married filing jointly. The second tier, right, that's where you start paying taxes. So that would be 50% of your Social Security benefit would be taxable to you. And then if you have income in the third tier, 85% of what you receive from Social Security is going to be taxable. So you just have to be aware that it's taxed out of your check going in, and then it's potentially taxed coming back to you as well, as a maximum of 85%. So you can look at this and say, well, they're taxing me 85%, or you can look on the positive side and say, well, 15% of this income is tax-free to me. Also, as part of the financial planning process, we want to take a look at your income with you on an annual basis. Make sure if you're close to one of these tiers that you don't do something that would push you into the next level. Right? Maybe you don't do too much of a Roth conversion strategy, or maybe you don't take too much out of your IRA account. All topics that we're happy to help you with, and it's a good idea to review it just to make sure you're in the right situation or tax bracket for yourself. So now another category comes up. Can I work and can I start my benefits at the same time? So you can, as long as you're 62, right? You have to be 62 to start your benefits. You're 62 and you're still working, you're going to have something that's called the earnings offset. That means that if you're receiving benefits and you're receiving a good income, Social Security is going to reduce how much they pay you. So the annual earnings limit for 2024, so I'm showing you 23, but for 2024, it's been raised a little bit for inflation. So earnings limit is 22,320 for 2024. So if you make under these amounts, if you make under 22,000, not a big deal. You get all your benefits that you applied for. If you make more than the limit, there's going to be the earnings reduction. They're going to reduce your benefit $1 for every $2 earned over the limit. So in this example, somebody worked, they made 23,000 last year. The limit was 21,240. They were 1,700 above the limit. So you divide that by 2, right? They're going to reduce it half, $1 for every $2 earned. So for the year, this person would have an $880 reduction. You take that, that's per year, so you divide that by 12, so they have a slight reduction every month. Not a big deal. They're not too much over the limit. But I think if you look at this in a bigger terms, right, if you're still working and you're in the middle of your career, let's just say you have income of $42,000. So the first 22,000 is fine in 2024. The second 20,000 is a problem. It starts to be a pretty big problem. So you're $20,000 over the limit. At a 1 to 2 reduction, Social Security will reduce the benefits that they're paying you by $10,000 a year. You divide that by 12, that comes out to about $833 per month. Significant reduction. All right. So we want to make sure that maybe we're not in the middle of our career, we're not at our full earnings ability while we're starting our benefits at 62. So you want to be aware of this. This does get paid back to you. So if you fall in this situation, when you reach full retirement age, there's a calculation. It's not going to be a lump sum payment to you, but there'll be a calculation that they'll begin to return this money to you once you reach full retirement age. So I believe the calculation will take you to about a 5 to 10 year payback period to receive all these funds. Earnings offset. When the year you reach full retirement age, 66 in a few months, maybe 67, but the year you reach full retirement age, they increase that limit to 56,500 of what you can earn. So the way this works is, say, for example, your birthday's in July. So the first 6 months of the year, you could make up to, this year, they raise the number to 59,000, but the first 6 months of the year, you can make $59,000. No problems, no reduction, no earnings offset. In July, you've reached your birthday, you're now full retirement age. So going forward, you can make as much as you want and have no reduction to benefits. So the big thing here is once you reach that full retirement age, there's no more earnings reduction. And that year that you reach full retirement age, they really kind of increase the limit. They just know that you're retiring in a short period of time, and they just want to help get you to that point. So they're a little more generous at full retirement age as well. So we're going to talk a little bit about moving forward with your planning. All right. So what we want to stress is just a couple things, right? Knowledge is power. So increasing your knowledge base of Social Security, your benefits, how to file for benefits. We're going to look at, again, big picture perspectives. And here we're at the credit union, so we'll talk a little bit about working with a financial advisor. So increasing your knowledge. So number one, there's a website, AARP. They have a Social Security Resource Center. And this is nice. They have a lot of articles in there talking about all different topics of Social Security. They have a nice disability article. They have how to file for benefits. There's an article about popular questions. So they have a good resource site there. Social Security website, ssa.gov/planner. It'll help you estimate your benefits. It'll help you how to file, show you how to file for benefits, walk through your statement. And you want to make sure that you go to that website and get that statement, get that copy of that statement that shows your earnings over the years, just to make sure that's all correct. Because if there's a problem with it, you want to make sure you correct those numbers now, not in the future. So you want to make sure you're in touch with the administration. Big picture perspective. So making sure that you're doing as much as you can on your own side as well, in addition to what Social Security may be providing for you. So again, we talked about it, Social Security. It's estimated it'll replace about 40% of your pre-retirement income. So 40%, right, that's not everything. Unless you have very low expenses, you'll probably need other sources of income. Again, whether that's the pension plan, your 401k, things like that, it all works together, and we can help you organize that. Make sure you're on track to hit those goals. You want to make sure, again, that you're investing enough into the 401k plan, at least to get the employer match. Well, it's kind of free money that they're providing for you, a benefit of your employment. Make sure you're receiving that match. Additionally, if you are over the age of 50 in your 401k plan, there's something that's called a catch-up contribution. Really kind of significantly raises the amount that you could defer or put into that 401k and save for retirement. So we can help you walk through that and make sure you understand the catch-up contributions, but it's going to help you really build those balances in the later years of your career. And finally, if you're self-employed, there is something available for you called a SEP IRA, self-employed person IRA. They have high limits in there as well. So you want to make sure you're taking advantage of that, not only for the tax advantages, but the higher deposit limits as well. And then finally, we're going to talk about, right, working with us here at ARIS or Alliant Retirement and Investment Services. So we can provide guidance and advice, budgeting, debt management, reaching financial goals. We're a one-to-one relationship. We can help focus on your specific needs. We can talk about, educate, review your specific investments, and show you what would be the best path for you to reach those goals. And we also talk about with Social Security, right? We can help you with this specific topic. What is my break-even point? Should I start it late or should I start it early? And we'll look at your investments. So if you're a kind of a growth-oriented investor, your investments are doing well, you might want to start Social Security earlier and let those investments grow. If you're a conservative investor, if you've always been at the credit union and savings and CDs, well, you might want to start Social Security later because it grows by 8% per year. So we can help you through those calculations as well. Like we talked about, what if I keep working? Maybe how much my benefit will be. I don't even know at this point. Or how should I coordinate my spousal benefits? And just looking at the best strategy for your long-term situation. So that's why we're here at the credit union to help you with these topics and put together that financial plan and make sure you're on track. So as I promised, we do have a quiz here as well on Social Security. So these are kind of fun. So hopefully we had some of this in the presentation as well. I know we talked about this several times, but on average, what percent does Social Security replace of your current income? That's about 40%. And that's on average. So the more money you make while you're working, if you're a higher wage earner, this number is going to be lower. It's not going to replace as much. And the less that you make, it might replace a little bit more. But again, looking at all the pieces of the puzzle together, making sure this coordinates with other income sources as well. Question number 2. In 2022, the average monthly Social Security benefit was A, $1,461, B, $1,827, C, $2,223, or D, $2,517. And I read all those out just to give you a chance to think about this here a little bit. But the actual answer is $1,800. So that's on average. And we see more people kind of throughout the Social Security system taking benefits early. So they have a little bit of a reduction, but maybe they didn't maximize how much you could receive out of the system. So I don't think I mentioned this, but Social Security takes the highest 35 years of earnings. So if you didn't work 35 years, you might have a 0 for an earnings year, but they'll still look at 35 years. So when you do all the calculations, the average monthly benefit comes out to $1,827. Now, another way to look at this is the maximum benefit. The maximum benefit, if you max out Social Security, in 2024 at full retirement age, the maximum benefit is $3,822 or $45,000 per year. So you can see the big difference, right? We want to make sure we do the proper planning for you. $2,000 difference, and it's a significant amount, right? And as we said, it goes on for your lifetime as well. So make sure we're doing the right things. If you were born after 1959, at what age are you scheduled to receive your full Social Security benefit? We had the chart. So you were born after 1959. You were born in 1960. Anyone born 1960 or later, their full retirement age, FRA, is age 67. So if you take it earlier than 67, a reduction. If you take it after 67, an increase of benefits of 8% per year. And finally, we have our Social Security benefits taxed. Yes, all are subject to taxation, maybe or no. And the answer to this is going to be maybe. It depends. We talked about the provisional income. So it depends on how much you make in your adjusted gross income and half of your Social Security. If you're in one of those tiers that has a 0% tax rate, we want to do everything we can to keep you there, but this may or may not be taxable for you as well. So with that said, just like to wrap it up today. Again, here is an overview of our educational resources for you. So webinars, we provide a weekly live webinar series. You could check the schedule here at this website, ARIS.AlliantCreditUnion.com/events. Listen to our podcast. I'm the co-host of some of these podcast episodes. We talk about everything from Social Security to financial planning, estate planning, Roth conversion. So great library of podcasts available to you. And of course, the website and blog, you can read some of our articles as well here on the website. But basically, we want to let you know that we're here. Part of your membership at the credit union, we do have financial consultants on staff here. And really what we want to do is we want to help you make sense of this and answer some of those questions, some of those tough questions like, will I have enough? Or where do I withdraw my funds from? Or like today, when do I start Social Security? So if you'd like to talk to us, get some of those questions answered, we can also help you, again, as I mentioned, put together that comprehensive financial plan, talk to you about ways to reduce taxes, maybe fight inflation, creating more income from your nest egg, reducing market volatility. And of course, we'll talk to you a little bit about healthcare cost, soaring healthcare cost in retirement as well. So with that said, here's my contact information. I appreciate everybody joining me this afternoon to talk about Social Security, and hope to have a chance to talk to you individually real soon. Thanks so much.